Secured felony guilty pleas from the world's largest cryptocurrency exchange, Binance.
Actually, it's Binance.
Binance.
Binance. Largest virtual.
Binance.
Binance. And let me be clear. It's Binance.
Binance.
Binance. Council has discussed crypto regulations and legislations at length, and we have come to the conclusion that instead of regulating, we are going to ape a fat bag each into laptop and pump it to over $1,300,000,000,000,000,000,000,000 market cap. Let's fucking go, crackheads.
Good morning, everyone, and welcome back to another episode of the Crypto Morning Coffee. I got my coffee locked and loaded, ready to go, because we have to talk about Bitcoin, as Bitcoin is crashing in real time right now as we speak. Bitcoin is going lower, and of course, we need to talk about what is coming next, as we definitely have to reset a lot of our paradigms, and at the same time, while Bitcoin is leaving us standing in the dust, only seeing red everywhere, we do have Ecomi and Veve building quite a bit. So today we also have a lot to look at from that perspective, so make sure to stay all the way through here. So, good morning to each and every one of you. Let's start out with the broader economic view. Bitcoin at 85,555, nearing the next potential bottom zone. And there is some very interesting things about this drawdown that is not comparable to the other drawdowns, and why it is very, very likely that we have entered a bear market here right now. Of course, a lot of people are also already calling the bear market, which is, technically on the 500-day rule, we've called the top here in this bump, right? The top was here. Doesn't matter. It's not about who called what. It is about what is going on right now and what we can do about it, right? And I will already tell you this. I have done two things. I have reduced risk in some area, like AI coins, but I'm also a buyer here, for example, at Bitcoin, yeah, and shortly potentially also on Ethereum. But doesn't matter, because that is a longer discussion about time horizons and so on. What is important right now is to realize that we have significantly crashed through the 50-week moving average here, and the 200-week moving average is basically our bear market target, right? Where we could go, but in between that we have some other supports. The other side of that is that we are in an extreme fear scenario, and we do not see any bounce in this area, right? We're just fear, and massive drawdown. And this is the largest drawdown by now. So this is already a couple of hours old, a day old. But this is the largest drawdown now in this bear market, or in this bull market, so to say. Because until you are finally confirming the bear market, technically there needs some more things to happen, right? Because what is indicator of the bear market? As we said, the 50 MA lost. Weekly close below it is the first indicator, and open and close would be in 2 days and 20 hours. So this weekly opening and closing below would be either more confirmation, even more confirmation. But then also for a structural trend reversal, you would need to take out this low, right? Because even if you would, like, if you would bounce here, then technically you have put in a higher low, right? So for the bear market to confirm, that also needs to happen. We've lost the bull market support band a while ago. We've covered that. So there are still some things. What I could imagine is that we encounter an area where we bounce here, where we also had this area, and then we bounce back, and that will call the bulls once more for a rally. It might not happen exactly here. It could also happen there at 75,000 or so, but that we get somewhat of a rally back to 100,000 at least, right? And in that time, based on fundamentals, we will decide if that is a dead cat bounce for a bear market, or if that is a real an into bull market rally, right? That is where both camps will decide this fight. And I can already tell you that if it would play out like this, then we would have a massive head and shoulders here, right? That to keep in mind, which would be an absolute trend reversal scenario. So it really comes down to, do we reclaim the 50-week moving average, or do we get a dead cat bounce at that time, if we even bounce here, right? Because so many things have been different this cycle already that we don't really know. We would need to check that as it occurs. But right now, I would say we can go straight as low as 80,000, and then we'll see. We do have our economic data that already came in. So existing home sales a little bit higher than expected. Unemployment rate also slightly higher than expected, 4.4 above 4.3. Non-farm payrolls, so jobs created 119,000 instead of 50,000 forecasted. That is a wider gap. More jobs created still. Unemployment went up, so it was not enough. And then the FOMC minutes. So what now is happening, in my opinion, is the market is pricing out the rate cut of that would happen in 19 days, that basically was considered confirmed, right? Because right now it seems that based on the data plus that we don't get CPI and so on, right? The market is in high alert, uncertainty, and so on. Talks of bubbles are going around everywhere, and we see that the chance for a rate cut has gone down to 35%. So I think that is what is really driving current fears. Then also quick look at the economic headlines, just to put ourselves where we are. So we see SoftBank going down, and then Nvidia disputes big short investor Michael Burry's bearish case. So right now, Nvidia is the point of discussion for a potential bubble burst. We do see Japan October exports massively beat estimates on robust growth in shipments to Asia and Europe. But Japan is in the focus right now. Japan also announces 135 billion stimulus to boost the economy and support consumers. And that means we do see it right now everywhere. Big beautiful bill in the US, Japan stimulus, Germany takes out the highest or the largest loan they've ever taken in history. I don't know, there are many more, right? So it seems that right now we are a little bit sluggish, but into what is potentially going to be the years of the largest money printing that we've ever seen in human history. So the question now is, when exactly does this kick in, right? Because it's not enough for the stimulus package to be announced. It's also when it executes. And there are a couple of dates that I have in mind where we could have this sluggishness, this bear market scenario unfolding, and at the same time everyone on the bull side being right as well. So we do have the rate cut off the table. So I would say technically December might be cooked, but also most of the negative news priced in right now. So we might be in for a bounce in December. Sorry, did I say September? I meant December. That is one. So we should see after hard move. After every move, there's also always a corrective move, right? You go up here, corrective move, then you go up more, right? Same goes for down. You go down, and then at some point there's a corrective move. So we should see that coming in somewhere. This could be December. And then we will decide whether we get a head and shoulders, the dead cat bounce, or we are already in the money printing scenario from there. The second part is Jerome Powell is going to be replaced in May, which we would be able to argue from a very strong position to say that from the standpoint of monetary policy, not much will change until May. So that would be 6 months out at least, and then a new guy or girl or whatever coming in would then decide monetary policy only from there. Let's say replacement is in May, next rate cut, then another month out. So you have 7 months ahead from here until there's really like a shift to be expected in this rate cutting policy. Maybe there's one or the other cut, but Powell will not destroy his legacy by putting in cuts right now, like one back to back cutting scenario. I think that's coming in earliest mid 2026. So there is a gap open from here to all the way in mid 26, where we could definitely revisit here our 200 week moving average. Have our bear market fulfilled and then come up from there from, I don't know what that would be then. If we extrapolate this, it would be something like that, right? 50 to 60,000 bottom. That is a potential scenario to go there, right? Maybe with a bounce, right? I didn't draw the bounce. Maybe with some bounces in between, right? But would that honestly shock anyone? If Bitcoin does that, I don't know. I think it would be really high as a bear market bottom if you consider that the last one was at 15,000. But then again, usually the bear market, if we drop into a bear market, was like 12 to 18 months. Could we still have such a short bear market? Or could we have a scenario in which inflation comes back and rate hikes are coming back on the table and we never get to this easy phase, right? That is also some question mark that I have in my mind as well while looking at this. So these are all scenarios, and now you could say, yeah, but give us an answer. Give us an answer. What is coming? I don't know. No one knows. Everyone who claims to know is a liar. I have no clue. I can only imagine scenarios, and this is what I'm presenting to you here. But the fact that the money printer goes on, and this is for sure, it has to go on. The fact that we might come out of a 5-year debt cycle in the US this time, the fact that all the other countries are lining up the money printer to service this is tells me that the bear market definitely should not take longer than mid to if confirmed, right? And this is also something that I would say is, according to our TSI, and we didn't hit the trend line, which is unusual, right? But according to the TSI, if we close this month in 9 days like this, without a substantial and massive rally, this is where I would say, yes, we are in a bear market. Based on previous facts, we can consider that we are bearish right now. Yeah, I will not call it as long as we don't see the structural. Then many people can claim, yes, you called it late, but I will not call it yet. Just because I want to wait for the monthly close. I want to see where it closes on the monthly, and I don't think that there's much harm done in strategy between now and 9 days from now with the price that we are right now. We have Benjamin Cohen here saying, one sign of the cycle being over is when you get extreme fear and no bounce occurs. This is what we have right now, right? I would argue that the signs of the top being in continue to mount. Even so, Benjamin Cohen, for example, also like a guy looking at charts on YouTube basically every day, he also doesn't call it, right? He says the signs of the top being in continue to mount, right? So no one knows. He doesn't know. I don't know. No one knows. But we need to be cautious a little bit here. That is Ecomi burns. We come to that later. So here is our extreme fear level that we are right now. I think we have hit 6 already. So this from CNN Business. There should be a bounce at some point. Usually that we don't spend like weeks and months in that. Usually there's a bounce and then it goes back to fear and neutral. So before we go into this, let's welcome the rare hodlers. Let's welcome everyone here. Trucking Hand, good morning. Coffee loaded, absolutely. Let's take a deep sip of coffee to withstand our bearish scenarios here. We do have G-Money coming out with coffee and Omi rockets. Absolutely appreciate that as well. We do have Christopher Bodo. Good morning all. Nice to see Veve making moves, even if market doesn't reflect that. Absolutely. Veve is just doing their thing. I think they had stuff lined up for a potential bull run now, and then the bull run is delayed. No problemo, I guess. Because them building right now sets them up for massive success in the future. And this will kill a lot of projects, right? A lot of projects will be killed if this market drags on and goes into like later 26 or something like that because of the debt cycle. That could happen, right? Startups, companies in the crypto space that have not that much funding. We also have Jasper Frank and man, why does it show the handles? I don't want to have the handles. I would just want to have the names. Can I? I can't. I think I can't really change that, right? This just changed automatically when I updated it. This sucks. Anyways, Juice. I don't know what your name was before, but Juice 0017. New Rockstar affiliate is so cool. And Motili, good morning to you as well. So back to business. Let's listen to Tom Lee, because Tom Lee has called for 150,000 or 200,000 even Bitcoin and $10,000 Ethereum by the end of the year. And he is now $3 to $4 billion in unrealized losses on his Ethereum company. Forgot the name. But anyways, let's listen.
Technologies, an Ether Treasury company. All right, so Tom, you've heard what Steve had to say. This is, by the way, not unusual for NVIDIA, is it? NVIDIA, the good folks at Bespoke, your team, you've recognized that NVIDIA will often have these kind of wild swings following earnings, but what is your take right now on these markets?
Well, I think I'm going to kind of add to what Steve said. You know, I think the crypto market has been limping along since October 10th, because on that date was a negative shock. I mean, today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well,
so this is something that we did see, right? And this we don't know the fallout yet. Let me quickly go into an altcoin chart so to show you what I mean. For example, VeChain, right? Where it is? Yeah, so the event that he's talking about is this, right? This happened in a lot of altcoins, and I think it's especially on Binance, especially deep on Binance, where just out of nowhere the price crashed within hours into an absolute low part, and no one really realized what's happening because this is the daily candle, right? This is the day it happened, the 10th of October he was referring to, and it's in almost every chart, and that is where he says that there's the liquidity problems coming from that, and we don't know yet who took massive damage here, right? We don't know where the damage lies, but someone and some individuals and companies and market makers and so on must have lost a shitload of money here, right? And I think this was especially targeted at leveraged positions. They must have gone completely wrecked on this. This is insane, right? So, and these things can happen. Which is why it's not unusual to have some bids around such low levels if you want to really scoop up some coins, because I mean this is just nuts, and we see the aftermath of this is that, for example, VeChain completely lost support, and now it's clinging on to this level of absolute last resort, right? At the moment as an altcoin, although altcoins are not even that wrecked compared to how it could be, right? But this is an absolute low point. We see the wick going to 0.00964, and this is what he's referring to, right? This happened all across the board. Let me see where we are. There we are. And yeah, but let's continue to listen. It's super interesting, and let's see what the fallout is. It reminds me a little bit of things that happened throughout the previous bear market, when in the previous bear market, not liquidity itself, but stable coins got attacked.
That was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. Stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. that triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade, almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive.
Okay.
So just to put the parallel, right? I mentioned that last bear market, we did see the DPEG of first Terra Luna stablecoin and then also some other stablecoins that DPEG'd. This time, the DPEG is only in the trading pair, not in the stablecoin itself, and only in one market making or in one exchange, right? And that I believe, he doesn't want to say, but I believe it is Binance, right, where this occurred. And as he says, it's programming error, as they did not pull prices from other exchanges, which, by the way, probably would be something like using Chainlink to gather all these prices from DEXs and from CEXs and so on chain. But anyways, yeah, that is super interesting to me. Let's continue a little bit more because I think he perfectly explains what happens or what happened.
I
want to go back to this point, Tom. I hate the term glitch. I can't stand the term glitch because, things go down at the airport and they say, well, a glitch caused your flight to not take off. That's not a glitch. That's more than a glitch. It's a word that is used to describe pretty serious automation issues, software problems, crashes, for some reason that they try to minimize. Is this some kind of a software bug that's causing part of this? I'm trying to follow exactly what you're hinting around about.
Brian, it is. For instance, in 1987, portfolio insurance was the, quote, glitch. And that triggered the cascade in 1987. And so the industry learned and then never offered that again. In 2009, it was really the collateral wasn't secure in real estate and these packaged subprime mortgages. Now, the industry learned and they recoded that. I'm talking about Wall Street, but then regulators came in and over-regulated. That was the negative effect of that. In crypto, this code of ADL and the way they pull prices is never going to happen again. The good news is we're not going to have over-regulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is kind of, you're right. It is the nature of DeFi where there is going to be code and there's going to be an error found, and you said it, leverage is what's dangerous.
There we go. This is the end of the video. Probably he did talk a little bit more, but I think that's so that would be an argument for this might be over soon, right? And then the rally sets in, and that would be, I said 9 days and 20 hours for this to close. That would be right in the first days of December, to see whether we can, and I get this off here because people that are joining right now don't getting scared or so. By the way, smash up the like button, please, if you can. If you want to, if you enjoy this content, then you could do that. So I would expect the bounce or at least some reaction to come in here somewhere between 85 and 80,000 or 80. What is that? 85 and at 80,000, I would expect some 80,000 to 75,000 in this area, I would expect something to happen there bounce wise. Right now, fear is unfolding. It's spreading through the markets, but crypto has been hit in a specific way. And last time this was an attack. This time maybe so, right? Maybe it was an attack. Yeah, who knows? On crypto once again, and maybe the objective here is to trigger a cascade where also then ETF outflows complement this liquidity scare. But as always, this will be very soon a distant memory only, as you barely can remember these drawdowns here and here. And even I think most people don't really remember anymore how it was in these massive crashes on, what was it, Terra Luna, 3 Arrows Capital, Voyager, and then FTX, right? So that was basically the storyline down here. And then the bounce into every bear calling for 12K down here. And then we just rallied, and then there was the talk of the left translated cycle, where we rallied into the halving way too much and made a premature all-time. We rallied into the halving. By the way, the halving is it misplaced? No, I think it's correct. But then we came up and made a new all-time high fairly soon, and then there was the talk of the triple top, right? So we do see, like, bears have their time, right? They have their time. Bears that called the top here and somewhere in between, at some point they are right, but it's short-lived, right? Because they also, all the way up, the bears talked about the turning point and the crash. So I think that if anything, what is coming out of here might be good buying opportunity for the long haul, right? Not for day traders. Day traders need to assess first which bias they want to have right now, if they are bears or bulls here. So that was this. Then we do see here also news. Tether just bought the dip with 1 billion. For the first time ever, they used 1 billion USDT from their own treasury to buy BTC. They know the bottom is in, is the claim. So probably they're increasing the reserve on a good opportunity, right? I think that's what they're doing. They are increasing the reserve. Then we also have the claim that the global financial system just broke in Tokyo. Japan is in the focus. 30-year bond yield hit 3.41. This is an all-time high, I believe. That number means nothing to you. Here's why. It should terrify you. Japan owes 230% of everything it produces. So 230% in debt in comparison to their GDP, right? It's the highest indebted country of the first world, so say. It's the most indebted nation in human history. Even for 35 years, they kept the lights on by borrowing at near zero rates. That era ended this morning. Core inflation is running at 3. Government bond yields are spiking to levels not seen since 1999. China just conducted its 25th military incursion near Japanese waters this year. Japan is now forced to spend 2% of GDP on defense, nearly 9 trillion yen annually. The Bank of Japan is trapped between two impossible choices: raise the rates and trigger a debt collapse, or keep rates low and watch inflation destroy the savings. They chose door number 2, and exactly that's what we just saw in the news, right, with the stimulus package. Why should you care? Every major bank, hedge fund, and institution on earth has borrowed yen at cheap rates. This is the carry trade, right, and invested it elsewhere for 30 years. This carry trade could be worth anywhere between 350 billion to 4 trillion. Nobody knows the real number because it's hidden in derivatives. When Japan's system breaks, this money unwinds fast. The last time we saw a preview in July 24, we remember, right? Unwinding a carry trade. The Nikkei dropped 12.4% in a single day. The Nasdaq fell 13%. That was small tremor. The earthquake is coming. So Japan's government pays interest on 9 trillion in debt. Every 0.5% increase in rates costs them 45 billion annually. At current yields, debt service will consume 10% of all tax revenue. That's a death spiral threshold. The yen is trading at 157 to the dollar. If it strengthens to 152, the entire carry trade becomes unprofitable. Unwinding begins. Emerging market currency drop 10 to 15%. The Nasdaq could fall 12 to 20% as funds are forced to sell. And that happens next. December 18-19, the Bank of Japan meets. Markets are pricing 51% odd. They raise the rates another 0.25%. If they do, volatility explodes. If they don't, inflation accelerates and the problem gets worse. There is no way out. Japan's fiscal dominance is now permanent. They must keep the yen weak to service their debt. This means the free money that powered global markets since 1990 is ending. Bottom line, interest rates worldwide are going up 0.5 to 1% permanently, not because of inflation, because the world's largest creditor nation can no longer subsidize global growth. Your mortgage, your loan, your credit card, all reprice higher. Stock valuation built on cheap money, all compressing. Everything bubble is deflating. So why do I read this to you? This is not a recession, this is a regime change. The largest liquidity engine in financial history just seized up, and most people won't understand what happened until their portfolios are down 30%. Tokyo down 30% is our portfolio already, right? I mean, this guy is clearly not all in crypto. Like down 30%, that's easy. That happens on a weekly basis to us. Tokyo broke the world today. You'll feel it tomorrow. Okay, so why do I say this? Not to scare you, but we might have a narrative for the next meltdown in the global markets here that would coincide nicely with a shorter bear market or something like that. It could also take longer. This depends on how Japan's monetary policy is acting. If they maintain the rate stable and so on, the drag inflation, at some point they will get into this inflation problem, right, as outlined here. But it shows you that there is a chance, right? There's always a chance. If we pile up dry powder right now for acting, we might be able to act on something like, for example, a 30% crash in the S&P 500 or in global financial markets, in stock markets and so on, is a real buying opportunity, right? That's a really big buying opportunity in the light of the rest of the world going into absolute money printer on mode, right? So if we can get an entry 30% lower into dividend stocks and so on, into maybe in coinciding with that, a 50% drawdown in Bitcoin or something like that, get an entry there. This could be really good, right, as a buying opportunity. This to keep us from putting all our liquidity into buying the dip right now, and rather have something on the side to take advantage of a real global meltdown to extend our portfolios, right? This is why I'm reading this to you. If we can have a short World War III, then there's also a chance we have the shortest bear market. I would hope that we can get around World War III. That's really my hope, because my fear is that it would be right on the side of us here in Germany if that would happen, and I really don't want to go to war. That is my hope, yes. Maybe it can be diverted. Maybe it can be extended, delayed, whatever the heck is needed to not getting there. I'd say we're not there yet because of this meltdown is not yet here, right? And it's not only Japan, right? We're talking about the entire dollar euro, whatever currencies failing, that would be a scenario where I would see also inevitably turmoil worldwide, right? Hopefully not. It's a mess. Absolutely. I mean, we do see countries getting at each other. It seems a more frequent basis, but let's be honest, war for many, if you ask people around the world, war was a permanent story for them, and some might even call, I mean, if you ask the Ukrainians and the Russians, they're already in it, right? If you ask the Palestinians and the Israelis, they're already in it, right? So if you go to certain hotspots in the world, they are already in war. If you ask the Syrians, for them, it has already happened, right? So it's unclear where, how, what. If we try to predict black swans in that way, you can't, because a black swan is a black swan, okay? But because of that fear, gold is so high, right? Because of that fear, gold is at all-time highs, $4,035. The dollar is extremely strong compared to other still, right? It's at 100 still compared to other currencies. We didn't see really this high devaluation of the dollar here. Yeah, so let's take the next part of this year and really talk about going from World War directly to Ecomi, and that is the current number of burned Ecomi, and it has increased quite a bit. And the reason being is that Ecomi is really like building something, right? So I think this must be the first day of conversion for OMI to gem, and someone is complaining here only $2,500 in gems converted to OMI. We will see how this goes, but it goes both ways, right? People, I also posted this. I think I have this on my timeline. Wait a second, where do I go here? Profile, is that it? Yeah. Here, this guy said just purchase 100 gems from OMI while burning 36,000 OMI, right? So people are using this OMI to gem feature on Stacker at the moment, right? And then let's see here. Sorry, where is it? I thought I pulled it. Oh, there it is. Yeah. So Ecomi. By the way, Ecomi is going to be listed on Kraken still. So the listing still comes. The announcement was on November 11th, so 10 days ago. But they're still like on the listing roadmap. So I think it's happening in December. So trading is still not on there for Ecomi, right? But what they brought out now in big news is from the Veve side, from the Veve app. Big news, Veve fam. We're stepping into the future of digital collecting with Collect, a blockchain built for the world of fandom and collecting. Discover what is next. Chapter unlock right here. So they're building their own collector blockchain, and I think this is the right step, right? So let's see here. Veve is moving to Collect, a new blockchain built for digital fandom. This upgrade strengthens security, protects provenance, and opens the door to long-term ownership features like self-custody. Your collection stays the same, but the foundation beneath it becomes future-ready. Step into the next era of digital collecting with us. So this shows clearly that they heard the concerns about self-custody and about interoperability, ownership, whatever, right? Provenance. So for years, Veve has led the, let's read it a little bit together here. For years, Veve has led the way in bringing fandom into the digital world, transforming how collectors experience art, culture, and storytelling. Today, we're proud to announce the next step in that journey. Veve is migrating to Collect, a new blockchain purpose-built for digital collectibles. This marks a major milestone, one that not only strengthens the foundation of Veve's ecosystem, but also opens the door to true digital ownership, long-term value, and new opportunities for creators, licensors, and collectors alike. Why Collect matters? Collecting has always been more than simple transaction and market move. It carries emotion, history, and small details that give every piece its meaning. Authority, provenance, edition numbers, story. These are the qualities collectors look for because they define why something is worth owning. From day one, our mission has been to build a place where the world could collect with confidence. That clarity shaped every decision we made. This wouldn't be just another branch of crypto trading. It deserves infrastructure that respects the culture and the collectors behind it. Most blockchains were built for financial transactions, gaming, or general NFTs. But collecting is different. That's why we helped create Collect, a blockchain designed from the ground up to respect the nuances of digital freedom. So we will see exactly how that works and how Ecomi ties into that, right? Collect was engineered for the real needs of the space, from licensing and royalties to metadata protection and IP security. It's a blockchain that understands collectors and protects the creators and brands that bring their worlds life. So, what Collect enables. With Collect, digital collecting finally has a home built for it. This blockchain integrates the needs of licensors, artists, and collectors in one ecosystem. Royalties and rights are embedded directly into the chain, ensuring IP holders and creators are always recognized and rewarded when collectibles are traded. This is super important. This is super important because now they can host like also smaller creators if they wanted to. Security and provenance are preserved at the blockchain level, reinforcing trust and transparency. Flexibility gives artists and licensors confidence to expand into Web3 while maintaining control over their assets. Very, very important. For Veve users, this means the brands and creators you love can now engage more deeply, knowing their worlds are protected and respected for the long term. So, the Veve app, showrooms, AR feature, marketplace, and drop schedule are all here to stay. All that is changing is the foundation beneath it. By moving to Collect, your Veve collectibles will now live on a blockchain designed specifically for collecting. This unlocks new capabilities and greater freedom without changing how you buy, sell, or display. So they're moving, this also means they're moving away from immutable X, right? This was basically clear since IMX did not display them anymore in the ecosystem. Let's see the chat here. Are we still bullish as per Legendary? I'm bullish on Veve. I'm still bullish on Veve and Ecomi here. They are really speaking collector language in this article. It sounds wonderful. Yeah, absolutely. BTC Flash Week right now. Oh, yeah. Yeah. BTC has some action going on here to the downside. Live as we speak, we're crashing. We are crashing. We did Flash Week to the downside and probably triggered some bits here, some buys. Yeah, we're going wild. Look at the charts. Absolutely. So what is this crash only in the last, I don't know, in the last day? It's an 11, almost 12. Yeah, I would say it's 12% drawdown. This is massive crash. We are really like, people are getting shaken out in real time while we're speaking. By the way, if you enjoy this, So Cook, Crypto is a Scam, Cash is King. Yeah, we'll see, because I mean, there was some nice opportunity to profit in crypto, right? But look at this monthly candle. This is insane. Insane draw. As I said, I'd expect this to go even further to 80,000, right? But with Bitcoin, and I mean, I'm not talking about the 27 million other coins, but with Bitcoin, you had an 8x from the bottom basically. So there was some good opportunities to make money. And for me, that's not done, right? So for me, the lower this goes, the more I'll buy on Bitcoin. I'm definitely a buyer here already. I've just I did take out in this latter part here, my savings plan, right? Now I've reintroduced it, where I just buy on a weekly basis for a certain dollar amount, just for you to know. Okay, so is this the article? Yeah, there we go. And with the recent change allowing Veve collectors to purchase gems with Ecomi token, we're evolving our payment and payout system to be more future ready. While change can seem daunting, modern crypto tools have become as intuitive as online banking, simple, secure, and familiar. Then, self-custody. For many, this is the most exciting part. Soon you will be able to self-custody your Veve collectibles, meaning you can store them in your personal crypto wallet outside of the Veve app, just like any other NFT. This is very cool. I think there are many people that were waiting for this. Self-custody is optional. Veve will remain easy to use for those who prefer current experience, while giving more advanced collectors the freedom they've been waiting for. This feature will roll out in phase 2 of the Collect migration. The first phase focuses on securely moving all Veve NFTs to Collect. Once that's stable, so there will be a migration phase, right? In short, nothing changes today. Your collectibles remain safe, but the path to full Web3 ownership is now clear. Very, very important, getting back to the full Web3 story and being a leader in the Web3 space, because at some point this market will go nuts, explode, and as much as we didn't have an altcoin season or anything like that, I think we will come back to that once liquidity comes back into the market, once the stimulus hits, once market makers and governments and whatever are pumping money into the market. I think it will come back, right? So we will see when this happens. We got extended here for sure in this cycle. How the migration works: transition to Collect will be seamless. You won't need to take any action. Your ownership, edition numbers, rarities, and all associated metadata will carry over automatically. You'll log into Veve just as you always have, except now your collection will sit on a more advanced collector-focused blockchain foundation. The future this unlocks is stronger partnerships, major licenses, enhanced collector utilities, and self-custody, a blockchain that preserves, respects, and elevates fandom. And the good thing is also, right, you're now not dependent anymore on whatever the underlying chain does. Like, for example, IMX. What if IMX goes out of business, right? So you are basically dependent on yourself. You're managing it, and you could even invite other projects on your chain if you wanted to. So interesting is, so the migration will happen in January 2026, and then a Collect website will launch on December already with more details and so on. This is good. And then so it would be interesting to see that Ecomi becomes the gas token for that, to also use Ecomi somehow when you mint something on drop or so, that writing on the chain costs Ecomi. That would be cool, but that's not in here. Let me quickly check one more thing, and that is, we did have the Ecomi to Gem article as well, right? So we have two articles here to discuss. Okay, there we go. So here is just not reading the blah blah. It's more we all know what gems are and so on, but here, burns, fees, and tokenomics, right? So OMI to gem conversion, two important mechanisms. 7% OMI burn, permanently removing that portion of tokens used in the transaction from circulating supply. It's basically, instead of a buyback, you are buying and burning OMI directly when you are converting to gems, or also I think when you cash out. And then a 3% operations fee allocated to Stacker to support the infrastructure and maintenance of features. So on every $100, Stacker gets 3, okay? And then 7 are burned in terms of Ecomi. The lower the Ecomi price, the harder the burn. So if we were to crash here on Ecomi, but we still have nice stuff, we're getting the burns that we were talking about 4 years ago, basically, in some way or form. So these burns are happening at the moment, but they are still in beta mode. And then in this article, you can basically see how to link your account. But this is good because we're now back to seeing utilization for Ecomi, right? So if we look up Ecomi here, we should see the posts about the burns, right? We should see it somewhere. Wait, why is no one posting about the burns? I mean, I saw a post somewhere. I think it was, where was it? I think it was, no, that's my own. Where was the burn post? I don't know. I had it up. Oh, I think it was here somewhere, mixed in the middle. There you go. So this guy, Abis Omi Burn, maybe I'll just follow this guy. So 6 hours ago, he posted this, where we see Omi to NFT. Basically, there's Omi to NFT, Omi to okay. So this is the burn coming from direct purchase via Omi, and then this is coming from the Omi to gem. So the total burn was 2.7 million, and then the day before 3.6 almost. So we clearly have an increase here. I think it's even an all-time high, this one, right? So the burns are happening. I mean, the speed of the burns is not quite yet where it should be, but that's fine for now, as the price, if the price goes lower, the burns intensify. How long will it take for Bitcoin to reach all-time high? I don't know, but we're definitely dropping right now. We will see what's coming out next here. We do have some more economic data, but nothing too crazy. So let's see. Let's see how this turns out. We definitely will close this week low, it seems. I don't expect too much of a pump here out of today. Excuse me, guys. It's early in the morning. And we're crashing. That's definitely not the best setup for the weekend. This is insane. Look at this. Yeah, but good for piling up some bitcoins. Good for buying some Bitcoin here. We will see how it goes. It already did the next cycle. Yeah, here's your all-time high. 120, what is it? 126,000 on this uptick here. Yeah, here was the Bitcoin top. Actually, it was here, but that is at least what we assume right now, and then we will assess as outlined in the first half of this live stream. With that said, guys, thank you so much for being here. Smash up the like button, subscribe to the channel, notifications on. Good things are still coming. In every crash there is a chance. The bulls are making money while the bears are making headlines. That is for sure. So wherever you are on the world, have yourselves a great morning, evening, day, night, or afternoon. I see you in the next live stream or video. Have a good one, and bye.